Well, hello and welcome and hello. Thank you for tuning in to another exciting edition of Un Poco Mas, the show where we give you just a little bit more. Guys, today, if the day ends in a Y, I would like to talk with you about the Sofi stock, ticker symbol SOFI. Guys, it is a rough day for tech stocks and NASDAQ in general. NASDAQ is down 2%. The SoFi stock is down 31 cents or just over 3% on the day. Basically, we had this pattern that, I mean, for lack of a better term, I call it the mountain than the hump. Like, we have seen this thing so many times, guys. This used to happen almost every single day, and it wasn't that long ago. We basically see for the first 15 minutes, in this case 20 minutes, they're just buying the hell out of the stock, running it up, sucking as many people in as they can. The stock came within 1 cent of hitting $10 here at 9.50, and then like clockwork for like the next half hour or so, they just dump the stock, guys. Dumped it all the way down to $9.37. Didn't look like they stopped out that many people up 9.50. I don't know if that was really the goal or if they just wanted to cover some shares down here. But you see the mountain and then you see the hump. And this is where the algo just kind of trades it in this mild hump. And then at the end of the day, right now, the last 30 minutes of trading, guys, by the way, it is July 20th at 12:32 p.m. out here in Los Angeles. That's a Topper time check. It's 3:32 p.m. out in NYC. Hope it is a wonderful day wherever you are. Again, that is a Topper time check here on July 20th. The SoFi stock now moving up a little bit at the end of the day, $9.55. Volume is 37 million shares, which is pretty much close to average for what we've been seeing lately. If you take a look at the chart, it certainly has broken below this channel that I had the stock trading in, perhaps a bit of wishful thinking. But we had been making higher highs and higher lows, definitely in an uptrend. Of course, during that massive dump this morning for that, the 40 minutes following the 20 minutes. So it would have been like, you know, the second half of the first hour of trading, the stock just got absolutely massacred. It did bounce off and they added shares back quite quickly, but then the algo took hold and it's just been trading in that sort of sideways hump pattern that we know so well and have known for many, many months. Stock is trying to regain the moving average. It looks like RSI is getting a little bit hot, not overbought just yet, but getting a little bit hot. Um, what is this chart basically telling us ahead of earnings? In my mind, the uptrend is not over because we can see that I told you this, guys, yesterday. I tell you this every single week. What are they going to do? All of these short-term call options on Friday. What do? Market makers own those options. They run them up on Tuesday. They dump them on retail on like Wednesday or sometimes Thursday. And then either Thursday or Friday, they absolutely kill and destroy those options and leave retail holding a big wet bag of dog poo. Um, and that's happening again this week, guys. You see, these options were up big on Tuesday, and now that $9 option that's lost quite a bit of its value. Not that much volume there at 950, 16,000 options lost 62% of their value. The $10 options, guys, where there was so much activity, 27,000 calls and 55,000 open interest. Guys, these options just lost 80% of their value. And I guarantee you market makers dump this garbage on retail. They do this every single week, guys. It's like clockwork. Stop buying these short-term options. Everybody's like, "Oh, it's going to the moon. It's going to rally. It's going to be." I mean, everybody's saying, "Oh, we're going to be 12 before earnings. We're going to be." Guys, this stock is not going to move up another 20% before earnings. Everybody's gun shy. Everybody sees how this stock gets attacked after every ER. Maybe there's a slight run up, slight bump if the beat is really, really good. But then, they short and attack the stock. They've done it every single time. So you can't blame some swing traders and especially day traders for being a little bit reluctant to pile into this stock ahead of earnings. So I actually look at this, guys. The SoFi stock is holding up very, very well, considering what normally happens to SoFi on days like this. I don't know why Yahoo logged me out, but let me go back over here to SoFi, and so when they do this with retail, it is always either Wednesday to Thursday or Thursday to Friday when they decide to really kill these options, and then they get retail to just capitulate, take the loss, and that's the end of it. So, guys, SoFi, they had another Zacks piece out. You know what Zacks does? They basically look at earnings estimate revisions and they assign a Zacks score to the SoFi stock. Let me just plug this and say, notice the difference between the actual data and their narrative, guys. The shares have returned 14% over the past months versus Zacks composite of plus 3.6. Um, and then they basically go down, and this is their whole thing: earnings estimate revisions. Rather than focus on anything else, we in Zacks priority, we all know this crap about Zacks. So SoFi Technologies posted a loss of 6 cents per share for the current quarter, representing a year-over-year change of plus 50%. Over the last 30 days, the consensus estimate has changed negative 16%. Current fiscal year, the earnings of negative 17 cents point to a change of plus 57% from the prior year. That has gone down by 6%, the Zacks estimate. For the next fiscal year, consensus earning of 1 cent indicates a change of plus 107%. From a year ago, the estimate has changed plus 60%. Having a strong, and then they go through, their record. They're saying this is a Zacks rank number 3, which is a hold. 12-month EPS revenue forecast. For SoFi Technologies, the consensus sales estimate for the current quarter is 474 million, indicates a year-over-year change of 30%. And for current next fiscal year, 1.98 billion and 2.42 billion, which estimate plus 26% and plus 22% respectively. Guys, that's low. Management is looking more for 2.05, which, is not a huge difference, but I just think that those estimates are quite low. And that's what, the narrative of the FUD and the bears and the turds, the chia pets, they want you to believe that the combined annual growth rate is going to be like down in the mid-teens, and I'm just not seeing it, guys. If you look at the data, that's what I'm asking you guys. Look at the source materials, look at the earnings report, and listen to what management has said. Management has consistently hit their numbers. They have consistently underpromised and over-delivered. That's how SoFi rolls. That's why you see the consistent growth at the top line and bottom line for like 2 years now, guys. Um, and if you don't believe me, look at the discounted cash flow model of this economist, James Ford, who had a really strong ranking over on Tip Ranks if you watched my video yesterday. And he goes through some of the FUD data that the analysts throw out there, and he's saying even using their FUD data, the value should be close to $20, and using his personal estimates, the value is $26. So, guys, I'm telling you, this is a DCF model. This is real data. His assumptions are not unreasonable at all. And he drew the same conclusion I did. When you look at what management has said and what they've delivered in the past, and the quarter-on-quarter growth, the year-on-year growth, how EBITDA has grown just extremely rapidly over the last several quarters, he just is not buying this analyst narrative because it's a bunch of freaking FUD and crap. Mahir Bhatia, who is with Bank of America, just came out and reiterated his hold at $10. So that represents a 4% upside. And then Andrew Jeffrey reiterated his buy at 11, which represents 14% upside. Some of the bears and FUD come in below that. But again, guys, I encourage you, read the earnings reports, read the source materials, read the data. Guys, the financial statements, what management is saying, those are audited numbers, guys. They're not fake. They can't be fake, guys. If you fake those numbers, you go to prison. That's the way it is. Ask the guys at Enron. You know, you just can't make up numbers and fake data. Of course, you can use some accounting gimmicks and you can play some games with it. But again, guys, look at the actual data. People online, the FUD, the bears, the turds, they're saying there is no growth. Growth is completely slowed. Growth is completely stopped. Guys, year over year, from March 31st, 2022 to March 31st, 2023, it's 330 million in sales to 472 million in revenue, guys. If you look back here to June 30th of 2020, revenue was 114 million, guys. Revenue this last quarter, 472 million. That's more than 4x revenue in under 3 years. Guys, guys, look at the actual numbers. Stop listening to the FUD, the BS, and the nonsense. And the other big point is that people are making is there's just too many personal loans, and these loans are defaulting in mass and so forth. But if you listen to management who gives the actual data, defaults are very, very low, and they're much lower than SoFi planned for. And they aggressively write off bad loans almost immediately. I can't remember the exact number, but they said if you're like 30, if you're one payment behind, they write off 50%. When you get to like 30 days behind, they write off 90%. And then I think it's 90 days past due, they write off the entire loan or something like that. It's very, very aggressive compared to industry standards. And what Chris Lapointe said is, what they had planned for, again, I forget the exact number, but it was like they planned for 4.5%. They're seeing actual defaults at least 1 percentage point lower than that. So SoFi, again, extremely prudent, extremely conservative, and they hit their numbers, guys. They hit their numbers. Bears and FUD spreaders can say whatever they want. And yes, growth is slowing in terms of a percentage or a ratio, but the growth is still very, very strong, guys. They did 1.5 billion last year. They're going to do over 2 billion this year, guys. We're talking 33, 34%, possibly 35% top line growth. For a company of this size in these conditions, that is extraordinarily bullish and quite frankly amazing. And I want to give a tip of the hat to Anthony Noto and Chris Lapointe and the rest of the SoFi management and executive team, and a wag of the finger. Tip of the hat, wag of the finger. A little shout out to my boy Daniel Tosh, who I think is very funny. Didn't really like his show, but love his stand up. Because I'm just not that big on those internet videos. I prefer cat videos, playing with string. Anyway, guys, SoFi, the earnings are coming up in just over 1 week. Again, I think management is going to over deliver. I expect a beat of the top line. I'm expecting a loss of 2 to 3 cents per share. I would really like to see 2 cents. The last 2 quarters, the loss has been 5 cents per share. Despite the top line growing a bit, still down at that 5 cent loss, which would imply there was probably some dilution due to stock-based compensation or for some other reason. Guys, checking back in, it's 16 minutes until the market closes here on July 20th. SoFi stock trading at $9.51, down 34 cents on the day, or 3.4%. Volume is up to 38 million shares, so probably going to be, landing somewhere around that low 40 millions, which is kind of average for where we've been recently. Taking a look at the live short interest, let's see if we're still around that. Yeah, still right at that 15% of the free float. The percent on loan and the shares on loan have gone down considerably, as has utilization. Today, I believe, yeah, they were returning a few shares today. It's a little bit strange to me. Returned 6 million, borrowed 4.5. Net borrowed change negative 1.7. So they were taking this opportunity on the red day to go ahead and do some covering under the cover of darkness, the cover of a extremely red NASDAQ here today. So it looks like shorts were covering a few shares. One of the ways you can look at that is a cost to borrow max only reached 1%. On days when there's a lot of nonsense in the dark pool, that number has been like 8%, 9%. I've seen it as high as 14%. Some days, but certainly not today. And guys, just remember, guys, coming into the ER, these guys are playing a dangerous game. They have covered a little bit, but short interest has not been this high since last September. So it's been almost a year since these guys have been shorting the stock at a rate over 15%. And it is a very dangerous game. coming into the earnings report because I feel like Noto and Lapointe can dial up almost whatever number they want. Like they've been going for this consistent growth, consistent beat, trying to grow the company as quickly as possible while still beating the top and bottom line and growing EBITDA almost every single quarter. So it's been a bit of a balancing act in that respect that I think management has passed that test with absolutely flying colors. Guys, again, whether you use a DCF model, whether you listen to Noto, Noto was confronted, in a recent interview on CNBC about a week ago at one of those, rich people conferences where he wears his windbreaker. They're like, well, people are saying the analysts for Morgan Stanley are saying you should be valued more like a bank. And Noto doesn't even argue. He's not like, listen, that's putting absolutely no value on Galileo, which is going to be an extremely valuable company in its own right, or extremely valuable division of SoFi at this point. I think it's very, very plausible that at some point Galileo would be spun off into its own company and create a tremendous amount of value for SoFi shareholders. I think that's why they're continuing to have Galileo operate completely independently out in Utah, or mostly independently out in Utah, and they have their own executive team. I believe the founder is still on board with Galileo. I'm not sure about Technesis, but I think there's a reason they're compartmentalizing like that. I think Noto has a vision. I think he looks far off into the future. And again, I think he is playing chess while all these other executives are just playing with their PUDs. Um, Noto, in my mind, is the best CEO in fintech. He's the best CEO in banking. They brought in this guy from USAA, who's an absolute force of nature and is growing SoFi Bank rapidly. And when they tell you SoFi isn't growing, look at the areas they are growing, guys. Look at the important areas. That's deposits. That's new checking accounts. And that's the percentage of people that sign up for those checking accounts that then use direct deposit, because that's where almost all of the deposit growth is coming from. And that shows a lot of trust. When you set up direct deposit from your job, you're not just there for the bonus and to jump ship, guys. You're there for the high interest rates. You're there for the products they offer. You're there for the user experience. You're there because you like the app. You're there because you like the convenience. You're there because you're sick of your big bank, guys. And that's why SoFi is growing every which way. They're growing the top line, they're growing the bottom line, they're growing their membership, they're growing their products. The only thing the last quarter that did not grow was the memberships in Galileo, which were reduced slightly. And there's just, no way around that. Management came out and tried to explain it, but, that was a bit of a black mark on the ER, and that's just a fact. Facts are facts. So we have to deal with things, guys. Some areas of the business are doing well, some areas of the business are doing not quite as well, and growth is coming where management can find it. But in these conditions, guys, I think they're doing a fantastic job. Looking for a 2 to 3 cent loss next Monday. You guys tell me what you're looking for. How do you see through the FUD, guys? You basically just go to source materials, you go to data, and you go to management. And then you think for yourself, you do your own research, and you make up your own mind in terms of what you'd like to invest in. Guys, it's the SoFi stock. The show is Un Poco Mas. My name is Danny Deals. For executive producer Hurricane Lopez and supervising producer Stock Karen, we would like to say thank you for watching. With 11 minutes left in the trading day, let's get you one more check of the stock price. Still sitting at $9.50 or down 3.5% on the day. Guys, enjoy the rest of your Thursday. Have a great one, and I will talk to you tomorrow. It's Danny Deals. It's the SoFi stock, SOFI. Thank you.